Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. It is Tuesday, 24th day of November, 2015, and this is the Daily Report for Gold and Silver. Although well off of the highs of the day, we do have precious metals complex trading higher today. Gold trading up about $5.50 to $6 on the day at 1074 and change. Now, the low is 68.63, which is where the market opened at, and the high is 81. So we're currently trading at 74, so we're well off of the high, about mid-range, about $6 off of the low, as I said, trading up about $6 on the day. Silver also showing a nice gain on the day, up roughly 6 to 7 cents at 14.18. It's seen a low of 14.07 and a high of 14.30. So as you can see, we are trading well off the highs, but we are still showing a fairly strong day. When we take a look, though, at our daily charts, let's go ahead and pull one up. You can see this green candle, that's this one right here. We're absolutely trading up, but you can see how far off of the high we have traded, this being around 1431, currently at around 1418. Time permitting, we'll look at some silver charts in a little bit, but first, let's look at a couple of gold charts. You know, traders, there's absolutely no doubt. It is nice to see gold come off of these most recent lows. When we take a look at our daily chart, this is, of course, standard candlestick format. What we can see is, first of all, we looked at this this point being roughly at 1080, and when the market broke through this point, it set off a lot of red flags as some potential for the market to go lower. We have in fact made a lower low on the day. It's the lowest low we have seen over the last 5 years. In other words, since the market has been at 1920, that record high, on the way up. We looked at some weekly charts to show you exactly where that fit in. We also talked about the fact that if this market cannot hold these lows here, and we're at that really critical point, 61 being the line in the sand, so to speak, but if we can't hold those, we could look at 1039, even $1,000 gold. But right now, we do have somewhat of a base forming with these lows at around 1070. We can certainly see that. The other thing on this chart that I do want to look at and point out, I should say, is the fact that we do have our bearish channel lines in here. Obviously, the market has been in a defined downtrend. And when we look at that, we had this market at the upper end of the channel, goes to the lower end, and now we can see that it's come to the upper end of the channel. So the question is, will it find resistance at this point right here and move back lower? Or could we see some sort of a base forming in the market and actually finding some support at 1070? Where does 1070 even fit into the big picture? To do that, we really have to bring out some of our longer term studies. So traders, I've done just that. I've actually pulled up a weekly chart. We'll go ahead and compress it in a second. I've blown it up so that we can see the most recent activity week by week in the market. Now, as we go into Thanksgiving, of course, as I said, we should see the volume really begin to contract. We could see volatility increase, but the outstanding characteristics over the last 3 weeks of trading has been a very, very tight range between the open on Monday and the close on Friday. We've had good range in terms of the highs and lows, considering last week we had this new low that was at around 63. This dotted line that comes in, you'll see it when it's compressed, but that is the 61% retracement from wave 3, that last really huge clip that we saw when gold went over 1900 an ounce. Now, as far as this week goes, we're only at Tuesday, so anything can develop in this particular candle. But as of now, there's a very tight range between the open and the close. And also the fact that we've got Wednesday, tomorrow, Thursday, Thanksgiving, and half a day on Friday, I don't expect tremendous movement. However, I have not only been fooled before, but if we look back to last Thanksgiving, we had a tremendous spike on the Monday following Thanksgiving weekend. Now, with all of that in mind, I've gone ahead and compressed the chart back to its former state so we can really see where this 61 comes in. And as you can see, we have made a lower low. There's no doubt about that. That is above this low. but both lows are still above, as I said, what I consider to be the line in the sand. And, it's typically when I get the most bearish that I start looking for bottoms, because I, like any other trader, can succumb to the psychological effects of this market moving down. And it typically is when the majority of traders are extremely bearish in the market. Do you find bottoms? Now, does that mean that we'll find a bottom in here? No, not at all. But this is the point, that if we would find a bottom, when the majority of traders in the trading community as a whole begins to get real bearish, that you do see the market begin to move up, kind of taking many by surprise. So we'll have to keep that kind of as in the back of our cap, so to speak. Now, I do want to take a look at silver in just 1 second, because silver is where we really saw a dramatic move down. But I draw your attention, this being November of last year. And so what we want to do is, it's going to be the third Thursday is when Thanksgiving is. So that's this candle right in here. And you can see this precipitous drop that we saw the week following Thanksgiving of last year. That's that large red candle. And considering that gold opened at roughly 1201 that week, but closed at 1167, you can see this tremendous move down that we had. Of course, that's really nothing compared to what we saw in silver. Let's go ahead and try to pull up a weekly chart in silver, and we've done just that. Now, let's go back to that same period in time. I can see the candle, because that was the point, this being $14 per ounce. There was only one time last year when we saw the market hit that. Of course, it was coming off of a high at $22. It came down, it found some tentative support, but this is the candle I'm talking about. You can see this extreme low in the market. And when you look at the range on this 1 week, remember, this is a weekly chart in which $14 was the low, and the high, which matches up actually with this 61% retracement, was $16.75. So in essence, we saw in that one particular week a $2.75 range. So not that I believe history will repeat itself, but we certainly want to be diligent, and we want to not forget what we saw last Thanksgiving Monday, meaning the Monday following the long 4-day weekend, in which traders just slammed this market. I don't know if they'll do that again. The other thing that's extremely different about what we're looking at is coming up mid-December. Of course, it's the last FOMC meeting, where it is highly anticipated that what we will see occur is a interest rate hike by the Fed after many, many years. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Wednesday for a short review just prior to Thanksgiving here in the United States. Have a great day. Bye-bye.